Hello, hello, hello. Hi, Shakti, and hello, everyone. We're gonna discuss news on the stocks market. And finally, today is the review of Shakti's dividend portfolio. He has recorded some of the videos on dividend portfolio and also tortured me trying to convince how good it is to invest in the companies which are paying dividends. Well, I'm almost convinced, but right now let's look at the numbers and let's everyone become convinced.
Yes. So my dividend portfolio is currently public. So you can go to our site and check for the saved portfolios. You'll be able to see all my holdings. I have started that portfolio within the app since end of October last year. So I've been tracking it without making any changes to it because the goal of that portfolio is not to tinker with, and that's the power of dividend investing. I can claim that dividend investors will mostly outperform most other type of investors in the very long run because we don't bother about the performance of the market. We are only interested in how the dividends are getting paid and if they're growing every year. And the companies that we pick, most of them are dividend growing companies and they have a very good track record of growing dividends for a while. And the only reason why they might be changed is if they cut their dividends for a couple of years or so. So that's the only time when we might want to change it, but that's a very rare occurrence among the portfolio.
Great. So I am sharing our platform. So you see we are in StocksDojo. So at this stage, you said that your dividend portfolio is publicly available. It means that I basically can go
To the saved
in
portfolios.
to saved portfolios. Anyone can do that, right?
Yeah.
Okay. Yeah, I see my portfolio. That is actually my real portfolio, and that is dividends. So going there, right?
Yeah. So this is also a real portfolio, and I hold all these in the same proportion as you see here. And as you can see at the top, I initially started with 30K or so, but by the time I created this portfolio in our app, it was 31,800. So I started from there, and since end of October until now, it has given almost 5%, and we have handsomely beat the market in this portfolio over the same time frame.
Nice. That's beautiful. So you have plus for almost 5%, right?
Yeah.
And this is the stocks that you have. It's mostly green. There are a few companies which we can see in the red zone.
And if you go to the top, there is this calculate dividends for the entire portfolio. If you click on that, it will try to go through all the tickers that we have. There are many tickers here, almost 31. So it will try to calculate the combined consolidated dividend yield, and that's around 3.16%. So I wanted to build a portfolio which is going to give a decent yield of about 3%, and that's what I've achieved here. And I only included stocks which have a very good track record of growing dividends, and also the rate at which they grow the dividends is important for me. So I picked some companies which have a nice 5-year CAGR and a 10-year CAGR.
This is so cool. So that benchmark comparison, that's going to be S&P 500. So this is where we can see if we beat the market or not.
Yeah.
So S&P 500 plus 1% during the same time frame, and we are plus almost 5%. Cool. Okay. So if we scroll down, then we can see a little bit more details regarding how much dividends has been paid, and your initial investment, the change, and the weight in the portfolio, right?
Yeah. So if you order by the change percentage, you'll know the companies which are doing bad now. So recently, United Health dropped 20% in a day, and that's why it's the top underperforming stock. But I believe in the company, and I'm not at all bothered with this temporary drop because I believe they'll come back up, and it's the largest health insurance company in the US, and they're not going anywhere. And they've already paid some dividends. And within the last 3 months, I think I have around $250 total dividends. If you scroll down, it will show the total of dividends that I've already received. My interest is mostly on that part, which is a passive income that I didn't have to work for, and it just keeps coming and landing in my account, and it keeps growing every year, and that's the whole point. And as you can see, with the dividend and the growth of the stocks, we have a good 5% change so far. And
Okay. Who is the top dividend payer? So I can
yeah,
sort by dividend
it's
paid
Altria.
and
Altria is the cigarette company, so they have
yeah.
a higher dividend yield at this moment. I have them in my portfolio. I mean, it's a sin stock. There's a debate on whether to own such stocks or not, but at this point, I own it, and of course, they pay the highest dividends. Their yield is high because most of the money that they make have to be shared with the shareholders, as they are the only player in the market at the moment in the US, and they cannot do any advertisement. They cannot grow that much, so that's why they pay their dividends back to the shareholders to keep the government happy. The second one is Verizon. That's the telecom giant. They have a good yield, and the thing with Verizon is they somehow manage to grow their dividends at 2% every year. It's not a high growth, but their dividend yield is high, so that's why they are part of the equation. So I do have a mix of high dividend yield, decent dividend growth, but continuous dividend growth. I don't like to see cuts in dividend growth, and also low dividend yield, but the growth might be much higher. I think in case of United Health, for example, the yield is not that high, but the growth is much higher. Same with Elevance Health. The yield might not be higher, but the growth is higher. So I have a mix and match of all within this portfolio.
Okay, so I can click on a particular company just
Yeah.
from here, and then we can explore a little bit more. And as you've noticed, I've clicked on United Health, and this is painful for me as well because I do hold the stocks. And for initially, I was super happy to get it. It was undervalued when I purchased. So I think I've invested around $1,000 in it a couple of months ago. Then after that, Warren Buffett got United Health, and I was so proud of my decision. And now, oopsie, it's going down and down and down. So, what is your opinion on this?
I can check the dividends. I don't mind about the stock. So if you go to the dividends tab, you see the dividends growing pretty high year over year. Yes, the adjusted stock price, which is the last column, is negative, but your dividend yield is going up because the stock price is going down, which is actually good when you try to reinvest the dividends back into the stock. The recent dividend change in 2025 was not as high as the ones before, of course, because the company is under stress, but they're still growing the dividends, which is still good. Anything above 6%, I think, is good. And before that, it was double digits. So, from a dividend investor perspective, this is a gold mine for me. And about the company, now if we go back to the financials of the company. You look at the 5-year CAGR and the 10-year CAGR at the top. You can see it's like 12% and double digits. So that's amazing
Yeah.
when I look at dividend growth. Now,
Yeah.
going back to the price chart, you might see the difference. Yeah, there was a huge drop right after that, and that's the problem uh, with the company. There was an issue with the CEO at that time. Unfortunate, and then currently, the reason why this company stock is under stress is because the cost of running the business has increased. I put an
Mhm.
article, news article. The second one is United Health, and it tells you why the stock is under stress. So as you can see, the first point is medical cost trends are accelerating, meaning if you see the adjusted medical care ratio, it has increased from 85% to 88%, which means the share of the revenue that is spent on patient care is increasing, which means the remaining profit that they have, the profit margin, is shrinking. And there is concern that if the
Yeah.
costs keep going up and up, their profit margin can keep shrinking. That's the main thing. And Medicare and Medicaid is government provided in the US. And there are some issues with the payments that they are receiving for Medicare policies. Government has put in some strict rules recently, and all that is causing the market to be worried. And they're worried about the future outlook. And so they are punishing the stock at this moment. But if you see the revenue of this company in the third point is $447 billion. That's the yearly revenue for United Health. So in comparison, we work for a company now which has a market cap of 4 billion in US dollars. This is like
Yeah.
450, 100 plus times. So it's a huge company. I don't think it's going anywhere. They just need to make sure their operations are done efficiently. Now you're going through operations subject, I believe, and I think they'll they'll require that for efficiency. So that if they improve their efficiency and if the policies are positive in the future for healthcare, then this company can recover pretty fast. So we'll have to wait and see at this moment.
Yeah. Yes. Basically, the issues related to medical cost trends and Medicare policy risks are pretty much common for any American company in this sector, right?
And also, this company heavily involves in Medicare. So the Center for Medicare and Medicaid has a funding that comes from government. So as you can see, the first
Yeah.
point and the second is CMS funding getting reduced, right? So that's one main reason for concern. So government payments going down can cause the stock profit margin to go down. So we'll have to wait and see how the policies change. And also, they had a recent incident. You can see the $2.8 billion in charges tied to cyber security issues,
Incident.
right?
Yeah.
That's a huge, and also restructuring and exits and whatnot. So they had to spend 2.8 billion. So at this particular quarter was not positive, right? Maybe they'll be able to fix all these issues in the next upcoming quarters and so on and so forth.
Yeah, I would say challenging point how to evaluate the stocks of this company.
Yeah, we'll go to our fair value estimator. And since we are looking at yearly financials, we'll be looking at what the latest information we have for, and you see the revenue has been growing very
Yeah.
well. So no issues in that area. Net income is where the pressure is. As you can see, the net income has dropped because of the recent extra expenses, and that's why the stock
Yeah.
is reacting negatively. But let's look at the cash flow. Um, let's see, if they have, yeah, okay, this is the cash that they're holding. That's
Yeah.
they have, that's ample amount of cash. And what is the debt? Long-term debt? Do we have that? Yeah, and that's close to, yeah, that's a bit high, but I think they can still manage because there's enough cash flow to manage these debt. And let's look at the cash flow. And for the past, yeah, in 20, we have data up 2024, 2025 will reflect soon. But as you can see, it's not a positive trend recently. It has been a bit negative, and we do expect more negative trend in the upcoming year once we have the yearly data flowing in.
Yeah.
So, um, as you can see, the net income and free cash flow has been dropping recently, and that's one reason why the stock is under stress. But if we use our fair value estimator, it will show up undervalued position because, as you can see, if you are expecting 8% growth for the next 5 years, uh, 8% returns from your perspective for the next 5 years, the company
Yeah.
just has to grow by 1%, meaning it hardly needs to grow, right? The stock is kind of undervalued from a cash flow perspective, discounted cash flow perspective. That's what we're using for the DCF valuation. And even with the current year's financials, I think this scenario wouldn't change much. The same I noticed for Elevance Health, which is another competitor for United Health, and they have the same issues. Though they are more focused on the commercial aspect of insurance, but they still have the cost pressures, and their stock is also kind of in an undervalued position at this point.
Yeah. Just a bit sad to see such a great company, which used to trade at 600
Yeah,
per share right now, 300. What's the value right now? What's gonna be? It's like $300
it because of the recent downfall, it crashed
Yeah.
20% within this week. Right? Yeah,
Yeah, that's right. And just a year ago, it was 600.
600. Yeah.
Uh,
And I
uh,
work for 11th Health, which is another competitor, and they also have a crash recently. And a lot of my colleagues own 11th Health in their retirement fund. and hopefully
Let's have a
goes.
look at them.
And
Yeah, it's a similar trend. If we look at the last 2 years, probably not as dramatic
not
drop
as so
in the recent
50% drop.
year,
Right, there was a
but
50%
still.
drop, and they recovered a little bit. Yeah.
Let's go back to United Health. Look at who is holding this stock, which super investors are holding this stock. All right. We have quite a few managers, 5%,
Yeah.
2% Berkshire. Just recently invested 1.7 billion.
Yep. That's probably the biggest number, even though their percentage holding is small. The number is pretty high for Berkshire. So there are a lot of investors who are in this company. Um, Especially the Sequoia fund has up to 5%. There's no competitor in the market today to take over these kind of businesses. They have a very strong moat. It's all about operational efficiency at this point.
Shakti, would you suggest that this is not financial advice for anyone, but just for me? What do you think about getting more stocks, or just wait? What's gonna happen, or sell them?
So I wouldn't recommend selling, but even in my portfolio, I'm not going to touch it. And the
Yeah.
dividends are going to buy more shares, so that's natural. But I always maintain a percentage allocation which is around that 4 to 5%, not more than that. So if your portfolio is not having 5% of UNH, maybe you can get it up to 4%, or maybe 5 if you're trying to push it. Right? So
Yeah.
it's still fine, because from a valuation perspective, it is much better. And when there is blood in the street, that's when you jump in and buy. That's what Warren Buffett says. I mean,
Yeah. When it's blood on the street, then you jump and buy.
yes, that's
Okay. You actually, we can actually see how much do I have.
your
So in my portfolio, I do have a United Health. My portfolio, by the way, is not doing as well as your dividend portfolio. It's just plus 2%, and it
but
is.
but you started a bit earlier. This is from September 17th, so data is a bit prior to mine.
Yeah, yeah.
So
So,
let's see how much United you have.
I have PayPal, who is a loser, Nike, and United Health. The weight is 5%.
Okay, you're already at that. That was your original weight. What is the current weight? Is the next one. That is,
Current weight is 4.5. Yeah.
you have little space. I mean, I wouldn't mind adding a little bit
Yeah.
from my perspective.
Yeah. Okay. Well, it's good I have Google.
Yep, the winner
That helps a bit.
to balance
That
things out.
helps a bit. Yeah. Alrighty. Um, Then the second last thing that I would do,
Yeah.
ESG rating for United Health. Here our AI ESG insights. And overall, you're pretty familiar with the sector.
Yeah.
You have worked in it.
So the whole point of
So
the sector is to provide quality care for all their insurance members, health insurance members,
yeah,
and we hold the doctors accountable for making sure their patients are taken care in the best possible way. Because our goal is not to pay too much of claims to sick patients. So we want our patients to be healthy so that our claims comes down as much as possible. There is a limit on how much you have to pay, you have to spend, but we don't want it to go beyond that limit, and that's our goal, and we are technically serving humanity to improve their healthcare.
I see here ESG recognition. That company was named to the Dow Jones Sustainability in North America, and mentioning here a cyber attack, which we have discussed. Also, operational emissions reduction. They're working on it, as we see. Environmental initiatives as well. Virtual power purchase agreement. Okay, let's rate them. Overall, what I think, no poverty, absolutely, right?
It's a debatable, because if you don't have health insurance, it's like if they don't pay out the claims that you are expected,
Yeah.
then you will go into poverty. Okay, so that's the problem. So let's say you have a health problem and United Health denies your claims, then you're done. So I don't know how to look at it, and that was the recent issue too. But I think they're working on it. They're trying not to deny as many claims as possible.
All right. I'll reduce it to 6. And then good
Yeah,
health
always,
and well-being,
that's the goal. Hopefully, they are achieving it.
quality education, gender equality. I don't know how much what they do
Yeah,
in
anybody
this
can get an
regard.
insurance. Any gender can easily get an insurance, no problem. As long as you have the money to buy that, you're good.
Yeah, that's true. Affordable and clean energy. We did read that they do have some initiatives, decent work and
Yeah.
economic growth. That this is one of the biggest company, industry, innovation and infrastructure. I am not sure exactly on this point. What do you think?
Yeah, they do. They use a lot of latest tech, starting from data collection, data processing, and also all the tools that they use for medical services. They try to be high tech, cutting edge all the time.
What do you think about reduced inequality? Are they helping to
I don't think
reduce
so. Yeah, because that's another
inequality?
debate, right? So you're right. It's not a. It's their one of their problems, right?
It's like, yeah,
People who
that's what
cannot
I think.
afford health insurance still have an issue gaining access to the best care possible, and that's one of the debates that always keep happening in the US. Right?
Yeah. Well, climate action, let's be bullish on that. Peace, justice, and strong institution.
Debatable. So yes,
Yeah, with cyber attack.
yeah.
We'll keep
Partnership,
it
yes, they have good partnerships. The doctor.
partnership. Yeah. Okay. So let's keep it as it is. So, and submit. Well, we did rate them as 59 on environment and social 62, governance 60. Great, lower than median. Actually, maybe today we're not in that good mood. Guys, please help us to assess the companies that you are interested in. It is very helpful for other investors and for you as well, just to think on how sustainable is the company and where it is going and where it is moving the economy and society. Well, and the final thing, 2 day strike. I missed it. I wanted to do it, but I really wanted to do it, but I missed a
If you
couple
do
of
it now,
days.
it will go to 3 tomorrow. Yes,
Will it?
it will increase. You're right.
No, because I have to do 2 or 3 consecutive days. I promise by the next time I will be higher.
Okay.
We did discuss
Yes.
dividends
Okay.
today. And what about what are we gonna do? A question?
Question and a quick one. Yeah, we can do that.
Okay, let's do it. Dividend reinvestment and compounding. What do you think about it?
Yeah, that's the whole point of a dividend investor. You want to invest in companies which are growing their dividends, and while they continue to grow their dividends, if you reinvest the dividends back into the company, it's going to create that snowball effect. And over several years, probably after 10 years or so, you will notice the huge compounding effect. And if you hold on for longer, that's when you make real money passive in the form of passive income.
Yeah. So DRIP, that's what it stands for.
Yeah.
Dividends reinvestment. What it stands for? Dividends reinvestment and IP. What is gonna stand for?
I think dividend reinvestment plan. I forgot.
Okay, mark is complete.
Hold on.
And now let's go maybe dividend policy quiz.
Mhm.
Let's
Yeah,
do it.
dividend reinvestment plan. That's it.
Huh. Okay. You wouldn't fail any question about dividends, I'm pretty sure. A sustainable dividend policy is most most likely when dividends align with free cash flow. Oh, hey, great job.
Yes.
Okay, cool.
And that's the beauty about
Check.
dividends. If you don't have free cash flow, it's very hard to pay the dividends.
Yeah. Okay, everyone, please share, like, and subscribe, or subscribe, like, and share in any order. It's fine. I will come back with new stories, new companies, and bye. Thank you, Shakti. It was great.